Welcome, Vistage members and guests. I'm Dave Nelson, a 13-year Vistage member out of the Pittsburgh area, CE 676, and your Fridays with Vistage host. Today we're talking about maximizing the SBA, Small Business Administration program to your advantage. Our expert guest today is Ami Kassar. Ami, welcome to Fridays with Vistage.
Thank you. Pleasure to be here with all of you.
So let me give a little bit of a bio, and then Ami will take it away. Ami Kassar is CEO and founder of MultiFunding. It's a nationally renowned small business advocate and leader. Ami is committed to ensuring that business owners have the best possible access to the capital that they need to grow and manage their businesses. Ami has been featured in publications including the New York Times, the Huffington Post, Inc. magazine, and the Wall Street Journal, just to name a few, and has appeared as a guest on Fox Business News. Kassar is the 2014-2013 recipient of the Small Business Influencer Award, as well as the 2012 Small Business Advocate Award. He's assembled research reports that have become a critical component of the national debate about small business lending. Prior to founding MultiFunding, among many other successes, Kassar developed Biz Equity, an initiative that helped small business owners develop valuations for their businesses. If you have questions as we go today, please type them in the WebEx Q&A panel, and we'll pick up as many as we can. So, Ami, let's get started.
Dave, thank you. I appreciate it. And just to reinforce what Dave mentioned, I encourage all of you, instead of leaving all your questions to the end, please feel free to put them in, and we'll try to make this as interactive and as much of a discussion as possible in a webinar format. So, Dave, thank you for the kind introduction. The only other thing I might mention is that I am also a proud Vistage member, as well as a national sponsor of Vistage. I hope to be meeting many of you in different all-city events across the country through the year, and invite you to check out my regular weekly column on Inc.com, called Smart Money, where I write a lot about the different issues for business and finance for businesses. Very briefly, we started MultiFunding 6.5 years ago with the goal and idea to make access to capital more transparent and clearer. We've assembled a group of over 100 different lenders who work to find our clients the best possible financing. And a lot of the work that we do is in the SBA, which is an exceptional program, and where I hope to focus a lot of my attention today. Why think about financing? There are some reasons that are sort of intuitive and some reasons that are not intuitive. You might want to consolidate debt. You might have some working capital issues. You might be looking for a building, a piece of equipment. You might be looking to expand, buy out a partner, acquire a business. Those are all good reasons, and many of the reasons that you should consider different debt options, including the SBA. But sometimes the reasons to look for financing are also not so obvious. But before we start that, I'd like to put up a poll, and I'd like to know sort of why you're here today. So are you considering the SBA for debt consolidation, for working capital, for expansion or acquisition finance, or are you just not sure? And if you don't mind taking the time to put that in, that might help you think about why you're here and how much you want to get out of this session. So the poll should be up, Dave, if I've got it right, on the right side of the column, and if everyone could answer that, that would be very helpful.
Right, absolutely. And if you don't see it there in the right column near perhaps the bottom, there's a little triangle that probably points sideways. Click it so it points down, and it will open up the poll for you.
A lot of times you have to ask yourself, what is it you're trying to accomplish in your business, and what are the issues that you're facing, and then that can help you think about how to use the SBA or other loan programs to your advantage. And
look at that, Ami. We've got the results already. That was fast.
Okay, and we have interesting working capital expansion, and people are not sure. So I hope one of the things that you'll get out of this webinar at the end of the day is you'll have a clearer point of view and picture as to how to use the SBA to maximize it to your advantage. I would ask you just before we really dig in to take a brief second and think about, for those people looking for growth, if the money fairy was, or the money tree was to grow in your backyard tomorrow and pick a number, $500,000, $1 million, or $2 million was to land on your balance sheet, and suddenly you had to use it, and you couldn't use it to go to the Bahamas or lie on the beach. You had to use it to do something constructive with your business. What would you do with it, and why? What is it that is holding, if there's something that's holding back your business? Is it a management team? Is it some equipment? Is it expansion capital? But if you were to try, say, double your business in 2 or 3 years, what would that requirement be? So I think it's important as you go through this exercise to think about what is holding you back from your business, and then how the SBA might be a good solution to that to help you get there. Sometimes there's an understandable aversion to debt. It's a bad word. People don't like it. But debt really should be thought about, I'd say, both offensively and defensively. So defensively, while we should always have lines of credit in our business or have debt things in there so that we can expect the unexpected, the last thing you ever want to do is go to a lender when you're in a hurry and you need money in 24 hours or 48 hours, because when that happens, they smell blood. But likewise, you should also be thinking about debt offensively and aggressively. What's your plan? What's your growth plan? Do you have enough debt? Are you properly capitalized? Interest rates are very low, and are you taking advantage of them now to make the good decisions to build and grow your business? So again, I encourage you to think offensively and defensively as you think about growing your business. A natural question is, what loan is right for you? And we're going to talk about how the SBA fits into that, but your business, picking the loan, a lot of it depends what you want to accomplish, and it's a mix of your business credit, your personal credit, what collateral you have to offer a lender, what cash flow your business has. Your existing debt is very important. Interestingly, in the survey, no one said that the SBA would be relevant for debt consolidation, but you really should. Whatever you're looking at new debt, you should think about your existing debt, and if there's an opportunity to recapitalize it and to restructure it. And you should be thinking about how to use it to maximize your cash flow and your business objectives. So you have to take your existing debt into consideration. And then thinking about the loan options, you have to think about how much collateral you want to put up, personal guarantees, how quickly you want or need the money, and interest rates. And I'd like to show you today how the SBA can really be an excellent solution for a lot of these things. The business lending environment is still tough. We have a tougher economy for small business. Still, many businesses are coming out of it, but a lot of financial results are still strained from the impact of the Great Recession. There's still a lot of nervousness in the air. People still want to conserve capital and preserve cash flow. Banks are still tighter, although better than they were since the Great Recession. And this is a very good time, we think, to think about the SBA both as an offensive and a defensive strategy. So I'd like to pose the second poll so we can understand where people have loans today. And I'd like to know, and you can choose as many as you want to, but if you currently have debt, is it through a traditional bank loan? Is it through an SBA loan? Is it through a private or an alternative lender? Or maybe you hate that and you don't have any. So again, this might help me to tailor, and you're thinking about it as we dig into the SBA and understand it. So if everyone would mind taking that poll, we can understand a little bit of the dynamics of the folks who are in the room.
All right, so you're saying we can click more than one if more than one of these apply. So go ahead, folks.
Right.
Answer Ami's question there and click the submit button, and we'll share results with you in a moment.
Again, there have been a big rise of private lenders and alternative lenders since the Great Recession. We'll talk a little bit about that in a minute, but if you've taken some of those, and some folks have, it's also a good opportunity. Interestingly, that very few of the people in the room have the SBA, and there's a third of the folks say they hate debt and they don't have any. So the question is, are you thinking offensively and defensively enough in terms of your balance sheet and how to grow and expand your business?
All right. Looks like the majority here, 55%, have debt with their bank.
That's correct. And the bank is a great place to get debt, but one of the things people have to make sure is that your bank is good at the SBA, and whoever you're talking to at your bank understands the SBA and is advising you on those options and choices. So again, every bank has a particular slice of products or services that they offer, every banker does, and you want to make sure that what they offer and that particular banker that you work with is compensated for is in fact the loans that are in the best interests of your business.
Interesting that just 9% of the folks here actually have an SBA loan, so it sounds like we've got the right audience for you.
Oh, good. Thank you. Okay. So, something to think about, and it's good, but has your bank been there for you through the recession? Banks can be the best and cheapest source of financing. But sometimes banks, we have seen a lot of history of banks shutting down lines of credit and banks shutting down different loans. And one of the advantages of the SBA is when a bank or a non-bank lender issues an SBA lender, because the government is involved, it is much more difficult in the next economic recession for them to shut it down. But one of the things that we have seen since the Great Recession is that alternative lenders are everywhere. And we did see that 23% of the respondents have loans or debt from private lenders. And this is good and bad. It's good because the alternative lenders have created many more options for small businesses. But typically speaking, the interest rates are either confusing or very high. And if you have taken on alternative debt during the recession and you can refinance that now, either through bank debt or through SBA debt, there probably are great advantages to improve your cash flow and lower your cost of capital. So while the alternative lenders have created many options and liquidity for businesses that weren't there the last 6 or 7 years, now might be the time to look at it to take advantage of it. And perhaps one of the big benefits since the Great Recession for business owners is that the SBA limit is now $5 million. So every individual entrepreneur has up to $5 million of guaranteed SBA debt that they can take advantage of. And pre the recession, I think it was $2.5 million. So the program is now more meaningful for more sizable businesses and something for them to think about and seriously consider. The SBA has a lot to offer in that the loans are pretty similar to traditional bank loans. They have longer amortizations than typical bank rate loans. They have much more reasonable interest rates than private loans typically do. And really the intent of the program is it's a guarantee by the government designed to encourage banks to place either loans with less collateral or more risky loans than they otherwise would. And you can really take advantage of it. The flip side of that is that these loans can be time and paperwork intensive. They can be, I joke, sometimes worse than going to the GI doctor to get them done. But once you're done, they can be terrific and really impactful for your business. What are some of the SBA myths out there? One is, someone might say, I have a successful business. I don't need an SBA limit. Well, that's not true at all. Many, many incredibly successful businesses started, grew, or evolved using the SBA, and they continue to have these loans, and it's an incredible tool for successful businesses. Another myth is that the SBA is only for people with bad credit. Not true. You have to have pretty decent credit and in order to get an SBA loan. And if you've got terrible credit or recent bankruptcies or problems with your credit, you're not going to get one. So that's not true. Another big misconception is that the SBA lends money. That's not the case at all. The bank or the lender lends the money, and the SBA guarantees it, or a portion of it, depending on the loan product that you take. So really what that means is that the SBA is not the lender. The SBA is like a big insurance policy, and whatever bank you're going to is the lender. SBA loans are not grants from the government. Sometimes people get that confused. SBA loans, you're obligated as the entrepreneur or the management team to pay them back. And if you don't, there will be personal guarantees involved, and or the government will come and take over the assets of your business. Another question is, any business can get an SBA loan? Again, that is not true at all. There are size limits and limitations. Some industries, the size limitation, if you can get an SBA loan, is based on revenue. In other industries, it's based on the number of employees you have. But businesses with 150 employees, sometimes more, $50 million of revenue, can get SBA loans. Another myth, which is true or not, is that SBA loans are time and paperwork intensive. They are, but with the right lender and the right support, you can get through as much of the pain as possible. But perhaps the biggest myth that I really want to dispel and bust today is that all SBA lenders are the same. Perhaps the biggest mistake we see CEOs and entrepreneurs making is that they walk into their local branch or they talk to their current banker, and the banker advises them about the SBA, and then they think that they are disqualified for the SBA or the programs that that particular banker suggested them to are the only SBA programs they're eligible for. That's not true. There are about 2,200 different SBA lenders around the country, and while they all follow the same rules, they each have their own credit box, and they each have their own unique way to sometimes interpret the rules, and you have to really make sure that when you're looking to use the SBA, you're going to a lender who knows it, who knows the program, is like a heart surgeon in SBA loans, and can help you get what your objectives are done. So do not think that if you walked into Bank of America or Wells Fargo into a branch and someone told you you are not qualified for the SBA for a particular reason, there is a good chance, not a 100% chance, but there's a good chance that there's another SBA lender out there who would have a different opinion. That being said, there are some issues that block or prohibit many CEOs and entrepreneurs from taking SBA loans, and I like to say you bring out the 100-pound gorillas right in front of the process, and if these are deal killers for you, you shouldn't do them. So one is that any owner of the business north of 20% must personally guarantee the loan and put liens on primary residence for all loans greater than $350,000. The SBA by law is required to take all available collateral, personal and business, for any owner north of 20%. So if, as an example, you own a residence and you are fundamentally opposed to putting a lien on your residence for a business loan, then the SBA is not for you. These rules are not negotiable. They are government laws and rules, and in some ways they make sense because the government is guaranteeing the money. I do want to be clear that that is not the case for loans under $350,000. It's anything over $350,000. The other reason sometimes business owners freak out about the SBA is that there are guarantee fees based on the loan amount, which we'll go through in a little bit, that get amortized into the loan, and sometimes people don't want to pay those fees. It's basically the insurance premium that goes into the government pool. You have to weigh the pros and cons of the loan and the advantages of the long amortization versus the fees, but sometimes that's a deal killer for folks. And the third issue is that the SBA requires to have a first blanket lien on all company assets for any loan north of $350,000. So sometimes by force, when you get an SBA loan, you have to look at your existing debt and see if there's an opportunity to recapitalize and restructure in one loan. I want to just reinforce some of the points that I've talked about before we dig into some of the details of the program. I call this where the rubber meets the road. As I reiterated before, and I couldn't reiterate it strong enough, all SBA lenders are not created equal. All lenders are not created equally. Do not presume that your local banker who has helped you with your lines of credit or your banking is good at the SBA. They may be, but they may not be. Be really sure if you're thinking about the SBA as an alternative, you are talking to an SBA heart surgeon, not a ophthalmologist. You really need to be talking with an expert who knows the insides and outsides of the program very well. This bank does SBA and focuses on them. You do not want to be a guinea pig for an SBA loan. If you do, you will be in trouble. So your current bank may or may not be good at the SBA.
So, Ami, I think, and this is sort of based on one of the questions that we got, it sounds like you're suggesting that you actually go in and have a conversation with the bank about their experience in SBA and how much of this they do. And, I mean, are there any other kind of qualification tips that you'd provide so that I know I'm dealing with the right, as you say, SBA heart surgeon?
Yeah, you need to know the particular person at the bank you're talking to. How much SBA loans have they done? If they're not the right person, who is the SBA expert at the bank? And you need to interview them. How many loans did they place this year? Average loan sizes, what was their success rate? What their average process time? You need to make sure that you are talking to somebody who knows the SBA. How long have they been doing SBA loans? If there's someone sitting at a branch who's been talking about the SBA for 3 months, wrong person to help you.
On the question, though, how many SBA loans have you done? What number would impress you? What kind of threshold would you be looking for there?
I would like to be speaking with someone who's working on at least 10 while they're talking to you.
Oh, okay, interesting. And how many might they have placed in a year?
Anywhere from 20 to 50, personally.
Okay, good. All right, well, those are great metrics that help us qualify our bankers, so great perspective.
You also want bankers, and I hope there aren't any on the line that I'm offending. But
it's just us, Ami. Nobody else is listening. Don't worry. This is being recorded, and a lot of people will listen to this over time.
Bankers are typically bureaucrats. Okay? And sometimes if you go to some of the bigger banks around the country, you find that a loan officer starts with a loan officer in Wisconsin that moves to a credit officer in Texas, that moves to an underwriter in Virginia, that moves to a closer in North Carolina. And in that process, if one little box is off of a check, anything can get messed up. So,
by the way, I want to jump in with one question here that is being submitted by Vish, and I'll leave it to you to answer because I don't know enough about SBA to even understand the question, but are underwriting rules different if I went to the bank directly as opposed to an SBA covered loan? Does that make sense to you?
Well,
or perhaps you can clarify.
Yeah, I think, Vish, the answer to your question is that every bank that does SBA loans has their own credit box and credit criteria. So the underwriting criteria for Bank A for your loan could be very different from Bank B or C. Sometimes it's Russian roulette about which bank will do your particular loan, because one bank might have heavier cash flow requirements, or one bank might have heavier collateral requirements, or one bank might like particular industries more than another industry. And so while there are certain minimum thresholds that the SBA requires, each bank has a lot of flexibility, which is sometimes why you need to kiss a few frogs before you find a prince and find the right bank. Sometimes it's playing Russian roulette to find the right bank that's going to underwrite your SBA loan. I hope that answers the question.
That's great.
So just my point that I was making is that in banking, there are problem solvers and problem creators. So it's really hard to find an entrepreneurial SBA banker, somebody who can help you, who wants to figure out how to get it done instead of how to kill it. And so part of it is, does the banker, which is hard to find, does the banker you're talking to have some imagination and is willing to think through and how to do your loan for you. The SBA loans generally fall into a couple of criteria. The primary product, which I think is 75 or 80% of all SBA loans, is the flagship program, which is the 7A, where there are loan sizes up to $5 million. It can be 5, 10, and 25-year terms. And these loans could be used for real estate acquisition, equipment, refinancing, some combination. And under the SBA 7A program, there's also the CAPLINE program, which is for working capital needs. The 504 program, which can go for loan sizes up to $9 million and product sizes up to $12 million, can offer 10 or 20-year fixed rate term rates for half the loan, which is very attractive if you're looking to purchase real estate or a substantial piece of equipment, and you want to hedge your interest rate risk. The SBA Express is up to $350,000, which we were talking about without a lien on the house. And sometimes there are also revolving lines of credit for up to 7 years, which give you some flexibility. And then we're not going to focus on it too much today, but there are special loan programs available through the SBA for veterans. Export businesses can get a higher guarantee, and community-based companies.
Just out of curiosity, are there other benefits to veterans or women-owned businesses and such of participating with the SBA?
There are. You can get some, you can get some advantages or some additional consideration as a veteran-owned business or as a women-owned business. More advantages for the veterans than the women, but there are some additional veterans programs that you can take advantage of. And again, if you want to do that, and you are a veteran or you're a woman-based business, you want to ask the banker that you're working with, do they do those programs?
Okay, and just also out of curiosity, another question being submitted live here. Is it just banks, or do credit unions also offer SBA loans?
So it's predominantly banks. There are some credit unions that absolutely do offer SBA loans, and there are about a dozen non-bank SBA lenders out there that offer them as well. They have a lending license as a non-bank to do the loans. The lenders generally fall into two categories. Some are preferred lenders with the SBA, which means they submit the application for automatic approval for the SBA, and that can, in occasion, accelerate the loan process. And in other cases, they're not preferred yet because they do less volume, and you can still get loans done with them, but it takes a few additional weeks in the process to get it through. So one of the questions you want to ask your potential lender is are you a preferred lender? And because that can make a difference in speed of time.
Okay, great.
Okay. The question of the amount of fees and the amount of guarantees. So one thing to understand is that the SBA guarantees an amount of a loan, and that depends on the loan size. For loans under $150K, the guarantee fee is 85%, and the guaranteed amount, and for greater than $150K, it's 75%, and on the expresses, it's 50%. And the fees, as you can see in the slide, go up as the loan amount goes up, and these get amortized and added to the loan amount, and you pay them off at the time of the loan. This is effectively like you're paying into the insurance policy that allows the SBA to happen. It's the premium for getting the SBA loan. These fees go straight to the government. They do not go to the bank, and they help to allow the SBA to continue to grow and do what they do for businesses. So I think you have to know that there are fees. You have to be comfortable with them if you choose to do them, and it's just a part of the project and how it works. There's another program on the 504 program, which we have to think about. In the 504, there are two loans that you'll get. One is from a certified development company, which is local, and the other one is from the lender. And on this one, the SBA guarantee is based on the debenture, and it's 0.5% of the lender share, and the CDC can share up to 1% of their share. So it's fairly complicated to explain, but if you want to get an SBA loan through the 504, which half of the loan will be fixed for the life of the loan, 50%, 40% will be variable, the fee structure will be different, and if you're looking at a 504, it has to be thought about. So what might you use the SBA for? Let's dig into some of this. SBA is incredible for business acquisition financing or mergers or partner buyouts. Really, the big benefit is if you are going to buy a business or buy out a partner, you can get 10-year terms on that loan, which gives you a lot of time to pay it back, and if there's real estate involved, you can get up to 25-year terms. SBA is also for business debt restructure, business expansion, commercial real estate financing, and business startups, and I want to dig into each one of those. So when you're going to look to buy a business, it's 75 to 80% financing for new buyers. And you can get by with a minimum cash injection for 10%, and you sometimes with some seller financing with a full standby. In some cases, when you're looking to buy out a partner, you can get 100% financing for the partner. If there's real estate involved, you can get 90% financing on the real estate component. You get $1.5 million in intangible assets. You can include working capital, and you can include new equipment. You can't have a bankruptcy for 7 years. You can have judgments in 2 years, and generally speaking, you have to have a cash flow of 650, your credit score of 650 plus. You really have to have in the business you're acquiring positive trends and no significant concentrations in clients or risk. To sum it up, the beauty of the SBA is that you're going to get 10 to 25 years to make an acquisition. You can get additional working capital for the first several months of running the business, or additional things you want to purchase as part of the acquisition tied into the loan. I think the SBA, particularly with the limit up to $5 million, is an incredible tool for acquisition, and one that is often not thought about, or typically banks, if it's bank financing, they might do 5 or 7 years, and often from a cash flow perspective, the difference between 5 and 10 years is really a big deal. We recently did an acquisition deal for a company called Honorcraft. They got 10-year financing. It was an incredible way that the seller held a note with a standby. And it was an incredible way for them to make a purchase, and the only way they could do it was with the SBA. You're going to need, I don't want to go through all this in detail, but as a general rule, when you are submitting a SBA application, the SBA lender is going to look for 3 years of personal and business tax returns, current personal business returns for any personal tax returns for any owner owning 20% or more of the business. They're going to look for a current debt schedule of the business. They're going to look at personal financial statements for the owners, any recent appraisals that are available, and the most current financial statements of the business. And sometimes they're going to look, not all the times, but a business plan including the projected P&L for the 2 years, and that will be particularly relevant in acquisition. Especially in an acquisition finance, any existing lease agreements and the copy of the purchase agreement or LOI, and how the purchase price will be split up will be very important in getting it done. So this is a checklist of what you're going to need if you're looking to do an SBA acquisition finance. It's fascinating to me that in our first survey, no one was thinking about the SBA for debt restructure. But I have to tell you that I like to say that at least twice a year, you should check in on your debt as often as going to the dentist, just to see, because oftentimes over the years, we've accumulated debt, and the debt that we've accumulated that made a lot of sense at the time may or may not make sense anymore. So I can give you an example of a company that we worked with where they came to us, a trucking company in Stockton, California, about $25 million in revenue. They came to us looking for financing for a new truck. And when we sorted through their debt, we were able to restructure their debt. They had never heard of the SBA before, and improve their cash flow by $1 million a year by taking some different loans and restructuring them and re-amortizing them over 25 years. So I absolutely strongly encourage everyone who's in this call, if you have existing debt, take a minute, review it, and see if there are opportunities to use the SBA to restructure it and improve your cash flow and improve the terms of your current debt, especially if you have private debt.
By the way, Ami, how long is the process? Assuming I've picked the right kind of bank that's actually, very knowledgeable about this. I've got the right person. I interviewed him or her and real comfortable. And, so from the time I start that process, what might I expect, or what's the range that you have experienced?
The fastest $1 million plus SBA loan I've done is 58 days from start to finish. And the longest one can take 9 months. And where they can get longer is mostly not the fault caused by the borrower, not by the lender. So you must have your financials in order and ready to go and be on top of your accounting and have your taxes done and everything filed in an organized fashion in order to get through an SBA loan quickly. If you are behind on that stuff, I promise you that you are going to slow yourself down. The other things that can slow SBA loans down are environmental reports, if there is real estate involved, and or appraisals, but that is nothing different to the SBA. That would be the same thing if you were doing an SBA loan or not.
Okay.
In a similar fashion, I don't want to go through this in too much detail, but for restructuring, the lender is going to need a full package, many similar things that they'll need for an acquisition, but a complete debt schedule and details of every note or lease to be refinanced, including the 12-month payment history, the security agreements, and the personal guarantees. The SBA can be incredible, and it's one of the best uses, perhaps, for business expansion. And often you can finance 75 to up to 90% of the total project cost of business expansion, and sometimes even more, and get money at 10 years terms or longer if real estate is being purchased. And I'd like to give everyone some examples. The CAPLINE program is a terrific program that not many banks use, but if you find the right bank, where they lend against AR and inventory, and it replaces a private or ABL facility. So in this case of a company in Southern California, they were stuck on the treadmill of short-term online loans, and they had AR and inventory, and we got them a proper working capital facility instead of term debt. And now their business has over time doubled or tripled, and their CAPLINE has doubled or tripled, and they've been able to grow the business in a healthy and a productive way. So if your business is heavy on AR and inventory, the CAPLINE program with the SBA, where you can advance 80 to 85% of your AR and 50% of your inventory, can be a fantastic program for you to use and leverage. O2B Kids is a wonderful client of ours down in Florida that does great activity centers for kids with after-school and summer activities and preschools involved. Each site is about $1.9 million of leasehold improvements. We've done 2 of them now for them with the SBA. And so for new site launch or new site development, the SBA can be an incredible program, again, taking advantage of 10 years to pay off your investment. I couldn't emphasize more. I don't know the size of the businesses in the webinar, but there's a great program where you can take $350,000 or less without a lien on your home. You get 10 years to pay it back. The interest rate is 6.25%. this program will not have a lien on your home and will not require first lien on your business, and it can be in tandem with other SBA debt. Here's a classic example using it for working capital. A client of ours called Worldwide Partners, and it's almost like free money to have 10 years at 6.25%, and it's strongly a program that we encourage everyone to think about and to consider. The lender is going to need similar information for these loans, and I don't want to go through it in detail, but the information is here and available for what the lender is going to need in order to do one of these loans. Commercial real estate can be an incredible program for the SBA, again, because you can get up to 90% financing, up to 25 years. Prepayment penalties vary depending on how the loan is structured. The big thing that's important to know, the SBA is not applicable, I repeat, not applicable for investment real estate. If you're going to use the SBA, you have to occupy at least 51% of the real estate that you are purchasing or refinancing in order to make the SBA work for you. We took a Party Plus, a big party center, and helped them get their move from renting to buy a facility in Baltimore. It was $3.8 million, and in doing so, he in fact lowered his monthly payments versus what he was paying from rent, and they used the SBA to take advantage of it. Some more things. The SBA is going to need detailed information. You can buy the business in a separate, and you should buy the business in a separate LLC or entity that you operate the building in a separate LLC that you operate the business in. But you're going to need detailed information and also to show an executed LOI or purchase agreement for the building and any recent appraisals or environmental reports that were available on the building. The SBA, it's hard, but you can do new business startups. The biggest thing that they're going to look for in the startup is that they're going to want to get really comfortable that the CEO has direct experience in managing this type of industry. It's much easier to do SBA loans for franchise startups than for brand new businesses, but you can be done. As an example of a company we recently did that opened up a gaming center, I think in South Carolina, and they were very happy. In this case, the SBA loan was under $150,000, but it helped them get going. And again, what the SBA is going to need is the lease, the written costs for improvements in the drawings, written quotes on equipment and fixtures, personal tax returns, and the franchise agreement, if applicable. If you are doing a franchise and it's on the SBA registry, it's much easier to do. Now, to repeat, these lists are here for you so they can understand what the information that you're going to need for different types of SBA financing that you're putting together. Again, low down payments with the SBA, longer term, up to 25 years on real estate, up to 10 years on any other uses, no balloon payments, no covenants, no prepayment penalties in loan terms, 15 years loans, multiple uses of funds in one loan. You can finance goodwill and other intangible assets. The loan does not have to be 100% collateralized. And there's lower down payment and longer term helps companies retain cash for working capital and other needs. So the SBA, with the right lender and the right solution, can be an incredible program for you. I want to just, as we wrap up here, and we're certainly going to open the floor for questions, I want you to think about what's holding your business back. If the money fairy or the growth tree was to arrive in your backyard tomorrow and plunk some money in your balance sheet, what would you do with it and why? And then, while the money fairy is kind of fictional, if you had 10 years to pay it back, instead of paying for it in current cash flow, would you make that investment, and how could that impact your business positively? And likewise, are you thinking defensively with your debt? We're all debt adverse, but are we prepared to expect the unexpected? If anyone doesn't have a line of credit and business is going well, now's the time to get it, even if you never use it. And likewise, are you thinking offensively enough with such a low interest rate environment? Do you have a plan? Are you properly capitalized? Do you have some or a decent enough debt on your balance sheet to help you grow in an appropriate manner? And that wraps up my closing remarks. I've left my contact information, but I'd love to open up the floor for any questions as we have, I think, about 10 minutes to wrap up.
Great. So, folks, if you have questions, please type them in the Q&A panel. And just in case somebody's listening to this and not looking at the recorded slide deck, Ami, I'm just going to indicate your phone number as you're displaying it as 215-460-1950. Your website is multifunding.com, written as one word, multi and funding put together. And email address is Kassar, as in Ami Kassar, at multifunding.com. And you can even follow him on Twitter. What are the tips you're providing people on Twitter, Ami?
We just follow general financing and business trips on Twitter all the time.
Okay, so keep us smart on this issue. In terms of getting started, is there a place where I can find a list of the banks that are SBA participants, or do I just have to start contacting banks? What's a good first step in finding a potential partner?
I believe you can go to SBA.gov and find a list of participants if that's the way you want to go, for sure.
Excellent. And you gave, I think, great advice about qualifying your banker based on somebody who's doing this on a regular basis, so you're not going to end up with surprises or an inordinately long process. John is texting in a question. How does the interest rate vary from traditional line of credit lending from a bank? So could you compare and contrast SBA versus non-SBA bank loan?
The interest rate's probably going to be a little higher, John, but you have to be really careful. I always say that if you have a line of credit, you should use that for working capital issues. And if you're using the money to make long-term investments in the business, you should use that for term debt. So you should not use, if you're going to buy a piece of equipment, that's the wrong use of a line of credit. The line of credit should be used for ups and downs in working capital, and the term debt should be used for investments in the business.
Excellent. I don't see any other questions coming in, so I think we've done a pretty good job of covering the interests of the audience. I liked your framing, Ami, at the end. Startups think differently often than traditional businesses, but it's something that even if I'm running a traditional business, I should pay attention to, especially given the program you've described. If I had the funds, what could I do with it? And that sort of opens up creative thinking about how to expand a business or acquire a partner or, that next piece of equipment, as opposed to simply being constrained by your current resources. So that, I think, is where debt is effectively used. So any thoughts in summing up?
No, I thank everyone for their time. I hope it was helpful. It was a little difficult to do a webinar. I can't look you in the eyes. But if there are any questions we can answer for you, if you ever want to chat. I'm another Vistage member and happy to chat with any of you at any time.
Excellent. And I'll also point out some things that we talked about in prep. Ami or another representative of his organization is often available at the All-City or Executive Summit. So all of us Vistage members have that come around once a year. So I would highly encourage you, if you're at the Executive Summit, see if you can find Ami or somebody representing MultiFunding and have a direct discussion. Also, the other thing is this is a recorded webinar, including with the embedded slides. So if you want that, you can definitely grab that off of the Vistage website. So, Ami, thank you very much for taking us through this and making us aware of a program that clearly most Vistage members aren't that familiar with.
My pleasure, and I really thank you for your time, and I hope it was useful for everybody.
Excellent. Well, folks, join us again for our next webinar, and that's just going to be 1 week from today, next Friday on April 15th. Hopefully you're done with your taxes by then. This is one you do not want to miss. Art Saxby is the founder of Chief Outsiders, and Brian Bolio, the CEO of ITR Economics, are going to be talking about the 2016 economic paradox, where we're headed, and what to do. And I bet you they're going to point out that interest rates are looking up going forward, and now might be exactly the right time to get involved with the your bank and an SBA program. So don't miss that one. And always, you can register at Vistage.com/FWV, as in Fridays with Vistage. And that's public, by the way. That's not a private part of the Vistage website, so you can invite guests inside or outside of your company. And you can always access the past recordings of these webinars at Vistage.com/webinars. You do have to be logged into My Vistage for that. Usually posted by about the middle of the week following the actual live event. So you can find this one probably by next Wednesday. So we hope to see you again in one short week. On behalf of Ami Kassar and the entire team at Vistage International, I'm Dave Nelson. Thanks for joining us today. Have a great weekend.